Hi and welcome to another edition of Weekly Market Report by tradersclub.co.uk. My name is Philip Conter. If you need to get hold of me, you can use these details. Very briefly, I would like to cover our disclaimer. Anything that we discuss here today, it's available in a public domain and therefore it should not be seen as advice for your trading or investment. I'm simply sharing my views for the benefit of the club members. I'll try and cover a number of financial instruments this time, maybe a couple of indices, some commodities, and possibly a currency. Very briefly, we can start with S&P. This is a weekly time frame of S&P. We can see that the uptrend is still intact with higher highs and higher lows. And despite a recent volatility and a pullback, we are currently retesting some major support, which is 20-period moving average on weekly time frame, and also this rising trend line, which held and confirmed support for quite some time. In addition to a basic moving average and a trend line, we are approaching some important lows at around 1760 level, 1765, and also the current lows around 7070, which happen to be these highs here as well. So these two levels are very, very important for me. A loss and daily close below 1770, especially below 1765, 1760, would potentially target further downside and maybe look for a support around 1739 or 1730 level before we attempt to go lower and maybe test 1722, which is a 200-period moving average on daily time frame. So those levels would probably be seen as a profit-taking levels for anybody who's a bearish. Alternatively, if these current levels hold, we can see the stochastics is at the oversold territory on a daily time frame, then potentially further upside is possible, but we need to be careful because maybe it's an oversold bounce back, potentially targeting a cluster of these previous highs and then moving averages as well. And I think if I show this to you in a 4-hourly time frame, it might be a little bit better for you. So we could see that price actually respected this kind of highs and created this a lower high sequence while still testing this 1770 level. So the buyers were kind of defending this 1770 level, but sellers were quite happy to sell into any rallies as well. So what I'm looking for as well at the moment is a daily or at least 4-hourly closure above the current high of 1793, 1794, a candle closing above this level. Then it would be logical to assume that further upside would potentially test these previous highs as the levels of resistance at 1798 and 1805, 1806, which happens to be a 50-period moving average on 4-hourly as well. These levels around 1804, possibly 1819, which happens to be 200-period moving average, are very, very important resistance levels on the way up, because we have a cluster of these previous lows here, and also on a daily time frame, you could see that there is quite a few highs at that level as well, and then if anybody is looking at this from a bearish perspective, they're basically saying that potentially this could be a right shoulder. This could be a head, and we are currently in the process of forming a right shoulder. So the oversold bounce back and a confirmation of that resistance above 1813, 1811, which sits nicely with this 50-period moving average on daily, 20-period, and this cluster of these previous lows as well, and then swift move lower would potentially confirm that analysis, but I would be very concerned that it would be second guessing it without a proper confirmation. And a proper confirmation for me would be a loss of this 1770, 1760 level, which is a clearly defined neckline and a very important support at the current level. So two scenarios: oversold bounce back, testing 1800, 1805, 1811, 1813, even 1820. And then consolidation there, and then we'll need to see how the markets react. Alternatively, a loss of 1770, possibly 1760, and a candle closing below here would potentially target further downside at 1739, 1733, and 1722. Okay, let's look at our second indices. It would be FTSE. Very briefly again, a weekly time frame for FTSE. It's quite telling. The price action is trading below 50 period moving average. We are approaching some levels of support and currently creating higher lows, and there's a little trend line that's kind of supporting the current levels. But FTSE looks more bearish than S&P and Dow and DAX and most of the other indices as well. If you do a very simple fib retracement from a swing low at 6000 towards 6862, which is the current high, we can see that the recent price action tested about 50% fib retracement at 6432 and kind of held that or confirmed that level as a level of support, which happened to be this trend line as well. But it doesn't mean that it might not move lower. A loss of that 6432 level would be very concerning for me. Then in that case, I would potentially be looking for further support at 6330 and lower as well. This is more kind of obvious if we see a daily time frame. We can see that the price action is trading below 200 period moving average on daily, which is a significant and psychological support. So unless we return very quickly to retest that 6554 level and create a daily close above that level, this appears to be a more bearish than, as I said, S&P and Dow and DAX and so on. So the loss of this 6432 would be concerning, and a daily close below that level would potentially target a further downside, including this low here at 6393. Call it 6400 as a round number, followed by 6330 and also this low here, so 6311. So those would be the levels of support on the way down. Alternatively, if we move higher, then obviously a 50 period moving average on daily and a cluster of these highs and lows would offer some level of resistance on the way up. So the levels that I'm looking at is a closure, daily closure above 6554, and a candle forming here could potentially target 6640, 6660, 6659 as a next logical level of resistance on the way up. But that's as much as I can talk about FTSE. We can go into a shorter time frame as well, and those levels are still in play. They're just different moving averages, but we're still talking about this a cluster of resistance on the way up at around 6640, 6660, 6671, which is tested quite a number of times in the past before we break and then move higher. Alternatively, that can confirm our resistance and potentially be an opportunity for a bearish traders to sell into that strength again. Okay, let's look at gold. Very briefly, we can see on the weekly time frame again that this is clearly defined downtrend. I don't want to bore you with this stuff. It's a longer term time frame. You cannot trade in weekly, but it's good for analysis. And price is actually rejecting a 20 period moving average. It's actually confirming it as a resistance. Stochastics is overbought, so it's extended on the way up. And in the past, any kind of rallies rising wedges in this clearly defined downtrend were sold. So we would just need to see a confirmation of the current levels. So what I'm looking for at the moment is, in particular, a loss of this 1235 level. So a daily candle closing below 1235 would potentially be seen as a bearish development, and in that case we could potentially target a number of levels on the way down, including 1219, 1220. We could potentially target this level here, which is 1219, 1218 as a level of support on the way down, and we don't even have to mention this 1180. It's a significant level of support on the way down as well. Alternatively, if the current levels hold and the price returns above 1260 and in particular 1279, that would potentially indicate that further upside is possible, and then resistances that I'm paying attention to on the way up would be at 1278 and 1294, which is a 200 period on a moving average, before we attempt to go higher. There's a number of challenges on this 1251, 1254 level, which is very relevant because it's this kind of a previous low here, and also a number of previous highs. So the price created a spike higher, but then it was sold, as I said, because of the weekly moving average, and also you have a very strong trend line resistance around that level as well. So a cluster of things pointing to a resistance at that extended 1265, 1270, 1278 level, and obviously market selling off. We had a risk on, risk off trade for last 5 trading days and so on, impacted the trade in gold as well. A tapering had impact on gold as well, stronger dollar, and all sorts of other stuff as well. So the levels that I'm watching at the moment is close below 1235, could potentially target further downside, initially targeting 1218, 1220 as a logical support level, before we attempt to go lower. Alternatively, if those levels hold and we move swiftly back above 1250, 1255, then previous highs at 1260, 65, 1274, 1278 would be a logical levels of resistance before we attempt to move higher and go to 1297. Okay, this is WTi US traded oil. We could see the price, yet again, weekly time frame price action. We can see the price is clearly defined by this kind of a rising 200 period moving average on weekly and creation of higher highs. So we are currently testing 20 and 50 period moving average on a weekly time frame, and those would be logical levels of resistance on the way up, and those levels need to be taken with confirmation, a daily or a weekly candle closing above those levels before we can attempt to move higher and attempt to go to this 155, 170 as the next level of resistance. It will be more obvious in a daily time frame. So we could see that the price was clearly supported by this 200 period moving average, and also a previous lows at 91.77, 91.24, and a breakout above this consolidation at 95.55 was enough to push the price higher. We tagged it from above. It was initially confirmed that breakout happened, and we came back down to retest this as a newly found support, a cluster of these previous highs and also moving averages, a very strong buying opportunity, and the price moved higher. So what's happening at the moment is that a psychologically important 99 level is in play as a next logical level of resistance. That's also relevant because it's very close to a 200 period moving average on daily time frame, 99.39. Only a breakout above these levels could potentially target this previous high at 171 as a next logical level of resistance on the way up. Alternatively, if the current levels hold, then I would be looking for a further downside on any of the moving averages that are in play. So 96.82 would be a 23.6 fib retracement, 38.2 fib retracement would be at 95.75, which is also a 50 period moving average on daily time frame as well, followed by 94.88, which is very close to that 95 level again, and that happens to be 20 period moving average on the daily time frame as well. The furthest or a deepest retracement would be at 94.01. So majority of the traders would potentially see a retest of these levels and confirmation of their support as a good buying opportunity before the price moves higher if they are sitting in a bullish camp. Okay, so that's so much I can talk about oil. So let's look at something. Okay, the last thing that I want to share with you is DXY or dollar index. So if you're trading currencies, obviously a stronger dollar index would be bearish for euro dollar and cable, bullish for dollar Swissy and dollar yen and so on. So this is basically a basket of 5 or 6 other currencies against a US dollar. So this is a weekly time frame, and we can see that price is clearly defined by 200 period moving average on weekly and also 20 period. A tapering confirmation by another 10 billion was seen as a bullish for a dollar longer term, and we could see this a fairly decent bullish reaction to that. A weekly time frame appears to be nicely supported by 200 period moving average, but I'm looking at the daily time frame now, and we are approaching some very important levels, at least for me. So the levels that I'm looking at the moment is this 200 period moving average on daily, and if we see a breakout and a daily closure above 81.50, 81.45, it would appear to be quite bullish, and in that case further upside is quite possible, potentially targeting previous highs at 82.70, followed by 83.50 and 84.78 as the next logical levels of resistance. And majority of you would be seeing this as an inverted head and shoulder as well. And if that's the case, and we are aggressive and we want to play this at the breakout, then the distance of the head to the neckline added to the breakout would give us that 84 level on the way up as a profit target level. Alternatively, if the current levels hold, and the confirmation of this 81.50, 81.45 level is sufficient, then a further downside would potentially be supported by 80.83, followed by 80.59, followed by about 80.20 or thereabout. So any of these levels on the way down. So here we go, 80.83, 80.60, all around here, 80.32 would be levels of support on the way down, and majority of the bullish traders would potentially see these levels as a good buying opportunity before the price moves higher. A loss of this 80.30 level and a daily close below that level would potentially be seen as a negative, and then a further downside would target these lows here at 79.68 as the levels of support and more significantly 79, which is a really significant support level for dollar index. Okay, hopefully you enjoyed it. We've covered a number of things. If you wish to know more, if you wish to join us for one of our live trading events, you're more than welcome to visit our website. It's tradersclub.co.uk. You can find more information in the blog section and register for our free weekly newsletters. So talk to you soon, and thanks for listening.